Now, assets invested in the global ETFs industry reached a record $11.63 trillion at the end of 2023. This comes at a time of notable growth in the use of ETFs by various institutions, including retailers and the financial sector. Deborah Fuhr, managing partner and founder at ETFGI, joins me now for a clearer picture of the trends playing out in the ETF space. Thank you so much for your time, Deborah. Now, just looking at the equity market, there were quite a lot of outflows there, and even the inflows that we had were concentrated on a few sectors. I want to zoom into the ETF space. How did the inflow and outflow dynamics shape up ETFs in 2023?
Last year actually was our second best year in terms of net inflows. So we almost had $1 trillion of net inflows. In 2021, we had 1.3 trillion. So we're close to the record. And when we look at where the money was going, many investors were investing in equity exposure. So we saw $532 billion of net new money going into equity exposure, $271 billion going into fixed income. And a big area of interest last year was active ETFs. So that was a relatively new segment of the market. It's often been very small in terms of the interest, but recently we've seen many active asset managers in the US decide to launch active ETFs or to convert mutual funds into active ETFs. And I know in South Africa, the approval to allow active ETFs has recently started there too. So we've seen South Africa, Japan and some other markets slowly allow the introduction of these types of products. If we look at outflows, we saw about 15 billion of outflows from commodities. We saw leveraged and inverse products have some outflows, and currency hedge products have some outflows last year. But overall, it was a pretty amazing year when we think about, we hit record assets, as you said, globally of 11.6 trillion. In the US, ETFs hit a record of 8.1 trillion. In Europe, 1.8 trillion. Canada had a record, Asia Pacific. So a lot of records in terms of assets. And it's become a preferred wrapper for many investors.
Yeah. Well, it's quite interesting because, I mean, just this trend that you're talking about, that we did see outflows out of commodity ETFs. And of course, we know how the commodities performed last year as prices were under pressure. Just even individual stocks, those commodity counters were under heavy pressure. Just talking about this new segment of active ETFs, Debbie, just, paint a picture for us of why, the interest into active ETFs rather than maybe passive ETFs at this point.
Well, I would say that the majority of assets still sit in index tracking, and people see index as solution. Yeah. But what we have seen is in the US, many retail investors and financial advisors really like ETFs. ETFs are more tax efficient than mutual funds. And so it's become a preferred wrapper. So they're asking asset managers to convert existing mutual funds into ETFs because they'd be more tax efficient. You could buy and sell them whenever you want to. You can invest in smaller sizes. You can buy them on all the platforms without paying commission. So there's some real end user benefits of the ETF wrapper. So we've seen firms like Dimensional Fund Advisors, Capital Group, Alliance Bernstein. There's a pretty long list that have come to market recently with ETFs, and now they're looking at how do they go to other markets. But I think it's really because the benefits in the US are quite significant. We don't have the same tax benefits in other markets, but for many, if they like ETFs, then being able to use a similar structure for all of your investments makes a lot of sense. And I think that's really what's driving a lot of the appeal of the ETF.
Yeah. I mean, let's zoom into the different markets. Were there noticeable differences in appetite between ETFs exposed to developed countries versus ETFs exposed to emerging markets?
Yeah, that's a great question. So, if you look at a benchmark that everyone knows, the S&P 500, right now there is $1.5 trillion globally invested in the S&P 500. So that's a benchmark everyone knows around the world, right? Mm-hmm. So, I mean, I'm sure you talk about it at times on even your show. Yeah. So I think that's well known. What we are seeing as a trend is there's a growing interest in India, people looking a little bit away from China because of tensions and kind of a preference for, India is growing. I think, Africa also, because of the growing middle class, is also a market or a region that many people are looking at. So we are seeing a differentiation in the emerging markets that people are looking at. Clearly, the war in Ukraine has caused people to move away from Russia. So yes, I think in general, the flows were into developed markets, but we are seeing for many investors, they're even looking at markets like Vietnam. So the benefit of the ETF wrapper is it makes it really easy for any investor to get exposure to any market because the ETF trades and settles like any other security on your local market, as opposed to having to get special permission or worrying about currency or other things that are going on in terms of the direct investment.
Yeah, and just to wrap up the conversation, Debbie, I mean, there are emerging trends in, the global economy, and I'm wondering if there have been any significant inflows into some of these emerging trends like ESG. I'm sure AI experienced quite a lot of inflows.
Yeah, so ESG is one thing where we definitely see that is a type of exposure that Europeans want. So in the US, it's become very polarized. Most people, I mean, we even saw that Larry Fink from BlackRock said he won't say the letters ESG any longer.
Yeah.
So certain states, it's not something you talk about. But clearly, when we look at the flows, I would say 99% of the flows last year were going into products domiciled in Europe by European investors. So whether it's financial advisors, or pension funds or other types of sophisticated investors. So for many, ESG is still a very popular type of exposure, and they want to do good. They're concerned about the future for their children, and they do see it as a financial risk. So I think for many, climate change, benchmark changes that are happening, SFDR is driving them to continue to look at ESG as a product that they're going to continue to invest in. And globally, we've seen 55 months of consecutive net inflows into the ETF industry. That's pretty amazing when you think about most other types of products have had net outflows many times over that 55-month period.
All right. Well, thank you so much for your time and your insights and just laying the table for us on the landscape and the trends playing out in the ETF space, Deborah. Thank you so much. That was Deborah Fuhr, Managing Partner and Founder at ETFGI.